Bitcoin prepares for its next big movement, a return to normality here at Cracking Cryptocurrency, and we're going to take a lot of your chart requests, so stay tuned for Breaking Bitcoin. Whew. Somebody pushed that button the wrong way. Welcome back to Breaking Bitcoin, everybody. This is your daily source for everything cryptocurrency markets and personal finance. My name is Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing fantastic wherever you happen to be and however you happen to be tuning into the show today. We've got a fantastic show for you today. We're going to talk about the recent KuCoin hack. We're also going to be talking about the DeFi craze. Going to touch briefly on the yield farming, let's call it craze, the yield farming trend, moving into the NFT trend. We'll talk about that just a little bit, as well as breaking down Bitcoin and what I'm currently doing with my positions, giving you guys an update. Thank you guys for your patience. Big move. I decided to go ahead and set the studio back up because the electricity is not upgraded to 200 amps yet over at the new house, which I want to be done before I move the studio over there. So instead of moving everything over there, I just decided to keep it where it was and set everything back up. So it was simpler. So thank you guys for your patience. It's been a good time. Cold weather now over here, especially on the East Coast, but particularly here in the Midwest. So, all right, I'll give you guys some premium updates here real quick. Online Trading Academy updates are coming soon, as well as new signal strategies. I want to give a shout out to Thomas Sputniks, Crypto Caveman, and Robert, who left comments yesterday on yesterday's return video after us not putting up a video here for the live stream for about a week and a half. And then we're going to be looking at the trades of the day, Soybean USD and Link USDT, which we just closed out yesterday. Good gains, good winners for those in the premium trading group, so we'll highlight those as well. But the first thing we're going to do is we are going to get right to the charts because I got a lot to talk about, a lot of charting to talk about. So hopefully you guys came prepared for charting. Let's get going. All right, let's start off by giving a shout out to those in the chat today. We've got ANCAP Futures, Crypto Jack as always, Profit Ver, Mr. Ether, Robert Warner, good friend of the channel, Midwest Attempts. We've got Rhino TD over there on DLive. We've got Right on Dice over on Twitch. We've got the stream elements, a bot running. Continued presence as always is appreciated. Zach Coma, Mr. Hut QC, David Rice, Wook Chewy, fellow festival friend. We've got Saintsy, Damian Hughes, Nitin Soki, Saintsy. I think I already said Saintsy, but if I didn't, what's up to you? Shout out to you, my friend Brian, Victor, Tyler, and Peckham. Good to see you, my friend. All right. Thank you guys for the appreciations on the setups. S180XT, good to see you as well. All right. So let's get right into this. We're on the hourly. We'll get to this in just a second. But let's start off by kind of the question on everybody's mind. And always the question that you should generally ask, right? This is something that I've noticed training not only students, but also training analysts, which is, let me give you guys an analogy. When I talk to close friends or family, and I ask a question, ideally, my interpersonal relationship with that person and our communication is efficient enough so that I can simply get the answer to the question that I want, and then I can apply that answer to the problem that I was trying to solve. So say, for example, I am trying to solve a math problem. I don't know how to do the equation. I ask my friend who's good at math, hey, how do I solve this equation? I don't need 30 minutes of arguing about what words you're using or semantics or trying to gauge what exactly you mean. I just need a simple answer to my question. Now, communication is the most difficult thing for humans to do, as we're all confined into mortal bodies and we have to use our mouths to make sound. And it's an imperfect form of communication, but very similar when you're looking for answers or direction on the market. Generally, the first thing out of an individual's mouth should be, well, what are you doing with your money, right? What are you doing with your positions? Because if you don't put your money where your mouth is, it's very easy to be a chartist. It's very easy to spin webs and narratives and draw lines and explain this and look at that and this thing over here that I've never looked at before, but now all of a sudden it's interesting because it's popular on YouTube or Reddit or Twitch or what have you. So keeping things simple. So obviously, generally, where I always start with the market when I'm determining what to do with my money is, should I go long or short on Bitcoin, or am I neutral? Do I want to do nothing on Bitcoin? Now, I, as an investor, hold Bitcoin, but what I do is hedge if so appropriate. So the last time we had talked, I had let you guys know that I had hedged around, above the $11,000 area. I had hedged, held those shorts to the downside, and I continued to hold those positions. I had taken a few longs. The last long that I took was on the last dive to the downside. That was a bottom feeder trade that completed successfully, and now we find ourselves where we're at today. So overall, if you've been following along, really nothing has changed so far. Hedged, and we're still hedged. And there's been a long trade in the interim. Okay. So now kind of determining, should we hold our hedge? Should we continue to hold our hedge? Excuse me. Should we drop it? Should we put on longs? Should we look for the moon? That's the basic, simple question. So I'm going to try to answer that fairly succinctly. Don't sass, Justin. Well, you know, it's really important. It's really important that you can communicate easily and effectively with your friends and family and those that give you information. Because the reality is there's only so much time in the day. And if you have to waste a lot of your time arguing with those that you love or that you need information from or that you work with, you're not going to be very productive. It's going to be a huge hit to your productivity. So to the degree that you can improve the communication between yourself and those around you, you will be able to be more productive and spend more time on what you want, i.e. getting things done, i.e. moving towards your goals. So, all right, we're going to start off on the weekly. So a few things that I want to look at today and try to answer are, all right, so we're going to start off by looking at what is the trend. Is the trend to the upside? Is the trend to the downside? And based on what direction the macro trend is in, which direction should we be trading? So we have the weekly chart of BTC USD pulled up, and the first thing we're going to look at is our exponential moving averages. We haven't looked at these in a while, but let's bring them back so that we can talk about them. Now, for those of you who have been following the channel for a while, you'll know that one of the weekly signals that I like to look for is the 13 and the 55 exponential moving average crossover and cross under. Those are generally almost always indicative of good runs to come in the future, and they get you into ideally, the last 50% of a trending movement. They don't get you into the bottom. You need a reversal setup, or you need to trade fundamentally for that, as well as selling tops. But when you're looking to get in for trending trades, the 1355 generally gets you in the last 50% of the trade. So it allows you to capture the last half of the body of the trade. And as a trend following trader, you're looking to leave the head and tails to other traders, reversal traders. We thought you were gone forever, Justin. Absolutely not. Absolutely not. DTs are finally subsiding. Good to see that, Ron Legato. DTs are a heck of a thing. All right, so what do we see over here? So just a while ago, we had a 1355 exponential moving average crossover, excuse me, right here back in May of 2020. There was a brief fake out down here when we actually hit the bottom. But again, keep in mind that that was heavily fundamentally driven. That was driven by the March meltdown, the COVID lockdown. And that's going to be another topic that we return to here in just a second. Previously, we had in May of 2019, we had that moving average crossover, which led to a good bullish run. And it wasn't until, right at the very bottom, essentially, of the market that we got that fake out with that cross under, and again, that crossover back in May of 2020, which led us to this last wave of the bull run, which in general, having talked to many people, is about where most individuals bought back into the market. And you can determine this from volume profile, for example. You can also determine this, for example, you have to kind of guess, but you can have good evidence that this is the case by looking at fundamentals on Glassnode, for example, MVRV, and coins moved, for example, like what price were coins purchased at before they were moved. And you can see that a large majority of individuals, most retail, bought back into the market around the $8,000 to $9,000 area. So a lot of individuals did not buy on the plunge down to 4,000. I know senior analyst Alexander did, for example. I was on the phone with him when he did it. And so most retail traders ended up buying back in here and having the opportunity where we are here. And we'll look at MVRV in just a second to actually prove that the actual ratio of traders in profit over the last 60 days is low, and the ratio of traders in profit over the last 365 days is relatively stable. So, all right, so looking at our weekly EMAs right here, I would suggest that we are actually in a bullish trend based on this indicator. The reason why is because not only are our indicators moving up, for example, we have our 55, our 100, and our 200 exponential moving averages on the weekly time frame moving up. They are trending to the upside. And again, look at the volatility that Bitcoin's put in even with these moving up. So since our 200 exponential moving average began moving up all the way back in 2017 on this chart, it's been a pretty good run. Although there's been massive volatility in between fortunes made and lost. But the most simple thing that we can determine is what angle are our moving averages moving. They are moving up. And then we look at our shorter term moving averages, our 8, our 13, and our 21. They are angled up in the case of the 21, and price has returned into them, meaning price has returned to the median. There isn't a lot of divergence away from price in our short-term moving averages. When there is divergence away from price, when there is a divergence from price, with price in our short-term moving averages, what generally occurs is one of two things. Either we are too far overextended from our moving averages and we experience a reversal and a reversion to the mean, or reversion to our moving averages, or we see a trend, as we can see here. As we can see price diverge away from the moving averages, we get a trend, and then at some point we see that it is too overextended and it pulls back down. So what this would indicate to me is that overall Bitcoin is in a consolidation area, and one should be preparing for the next movement out of this, because price diverges away from the moving averages, particularly Bitcoin, because it is so volatile. So overall, the EMAs are suggesting that we're in an overall macro bullish trend on the weekly time frame, and that we are back in a consolidation area. Does the daily suggest that as well? Actually, the daily does. The daily suggests that we are above the 200 exponential moving average on the daily. We have actually come back down to retest it. We're putting in a potential double bottom. We have a rounded bottom here and a potential V bottom right here, which could give us a nice double bottom. We do need to break the highs up here around 11,000. We'll look at that here in just a second. So with price above the 200 exponential moving average, I would say based on the daily as well, if we hold 98.72, we can continue to push to the upside. However, we may just see consolidation here before that movement. However, again, look at where price is relative to the moving averages here on the daily, and they are right in that band. We see the shorter term moving averages tightening up, indicating consolidation. So price is right back in a consolidation area, right back in the median. So what should one be doing? Same on the weekly, preparing for the next movement, and which means one needs to determine one's directional bias. You have to know which direction to trade it. All right, let's swap our exponential moving averages out real quick for our CC Ichimoku script. What do we see here? On the weekly, we do have the Tenkan above the Kijun, indicating a bullish crossover. Now, this would have not been the best signal, as we've talked about before. Moving average crossovers, with the exception of the 13 and 55, generally aren't that profitable on the weekly because they just move too slowly relative to Bitcoin's price action, which just moves too quickly. So we do have the Tenkan above the Kijun, though, which is bullish. We have price inside the cloud. And we do have the future cloud twisting up into the upside, which is bullish. So overall, inside the cloud indicates consolidation. There would be a potential edge-to-edge trade, which could potentially put price all the way down to 7,939 if that were to complete all the way to the downside. But we do need to close the weekly underneath that blue Tenkan, which is currently acting as a level of support. So I would say broadly, the Ichimoku is neutral, leaning bullish based on the future cloud and the fact that the Tenkan is above the Kijun. Does the daily support that? All right, if we look at the daily Ichimoku, we see that price is inside the cloud. Now, my experience with the Ichimoku and the daily time frame is that when price is inside the cloud, we either experience a quick edge-to-edge trade or we consolidate and move sideways. And we can see that with how the cloud is tightening. The wider the cloud is, the stronger the trend is, as we can see throughout this area right here. And the smaller the cloud gets, the lower the volatility gets, the lower the movements get, i.e. Consolidation. So we see that right here. The Tenkan is below the Kijun on the daily time frame, and we can see the future cloud starting to turn, tighten up, what would follow this if price continues to move down, it'll twist to the downside. So I would say that the daily Ichimoku is actually neutral here. So weekly is neutral, leaning bullish, and the daily is just straight neutral. All right. Now, let's look at a few other indicators right here. On the weekly time frame, I want to look at Minx. Minx is going to potentially give us an interesting signal here based on how this weekly candle closes. Now, it's only Tuesday, so we've got a lot of time to go. We've got a whole week for this candle to flesh itself out. But one thing I am going to be watching for is to see if the Minx line crosses above the noise line and gives us a continuation long signal. All right. So we can see the last time that Minx gave us such a continuation long signal was back on the week that opened on the 20th of July, 2020. That would be, So excuse me, this weekly close right here gave us the signal, and that led to a nice 3 or 4 weeks of potential upside. All right, let's see here. How high did we go based on the signal? About 20. If one would have cut a little bit of the wick, almost 25%. Profit potential of up to 25%. But in general, about 15 to 20% one could have caught on average. All right. So that's a good weekly signal. I do like those Minx continuation signals. They're one of the main signals that we use for the Minx indicator in the premium trading group. Now that signal isn't confirmed yet, but if it does occur, I think that we have the potential to move up here, especially because I'm not seeing any sort of what might be divergence. Now one reason for this is because it takes the weekly indicator here, which is set to 30, a lot longer. Excuse me, guys, I'm thirsty this morning. It takes the weekly indicator here for Minx a lot longer, but because I have it set such, it is quite good. This is an entry indicator. It's going to tell us good opportune moments to enter if we use it with crossovers and cross unders of the Minx line and the signal line. So I'll be watching for that continuation long signal. Paralox is actually pretty neutral. I don't see any extreme divergence from Paralox, either indicating a top, which it did over here by crossing above the overbought level, and it is overall in bearish territory. But again, this area right here around the 0 line in between 50 and negative 50, I consider neutral, so not really indicating much. Wadatar explosion is not giving any signal as to which direction we should be trading in. And one indicator that I wanted to point my finger to was, of course, hash ribbons, which we've covered before. Now, I would consider this inconclusive, but let's look at this on the daily. It's going to be a little bit more fleshed out on the daily. All right, so weekly EMAs, bullish trend, back in consolidation. So being back in a consolidation area gives you a good area for entry. Weekly Ichimoku, neutral, leaning bullish. And the only kind of signal that we see right here is going to be Minx potentially giving a weekly continuation signal. All right. Other considerations is the daily 200 exponential moving average at 9,800. It's actually 9,872. Needs to hold for the bullish case. And the daily EMAs are tight and coiling. So one thing that I wanted to point out there on the daily as well is kind of the breakout level. So here we go. We can see the daily 55 exponential moving average coming in at about 10,772. If we can close the daily above that, I would consider that a decent breakout signal. So what I'm gearing up for here is, in the short term, I think the bullish trade is the best trade on the table. However, I am still hedged, and I would hold my hedge. Now, I'll continue to justify that as we move forward. All right. The future cloud twisting up on the daily. So I do expect low volatility and volume are indicative of this consolidation. And I don't think that this consolidation is going to continue for more than a week, really. All right. Overall, I think individuals need to be preparing for the next movement if you don't have a market neutral strategy. And my personal strategy is to remain hedged from higher price levels. And I'm going to be playing a long from this current price level. As soon as I find my mouse. Found my mouse. All right. We're good here. All right, so after looking at the trends, I want to look at, do we see potential signs of reversal? All right, so we'll start off on the weekly here. All right, now the last time, the indicators that I have here on the chart are going to be the bottom feeder indicator, the ISIS spot indicator, the CM Laguerre tops and bottoms indicator, which is publicly available on TradingView, and JD Lim's TD sequential. So ISIS spot gave the sell signal back here on the 24th of August, really nailing the top after the third consecutive weekly doji. That was right before the big sell signal right here. That's when I hedged. That's when I gave the signal to hedge. Again, excuse me, I want to make sure I use the correct words. We don't give hedging signals anymore, but that's when in my market analysis, I let people know that I was hedged. Am I a tea drinker? You know what? Probably not as much as I should. I do enjoy a cup of green tea often in the evenings. What I'll usually do with tea is I'll put my prophylaxis in there. Prophylaxis means like don't catch this stuff that I do for Corona lately. So that's kind of like a elderberry syrup and zinc concentrate. I also put apple cider vinegar in there and then freshly squeezed lemon. I got that from the freshly squeezed lemon I got from Marshall. So thank you for recommending that. And that's been keeping me pretty healthy. I feel pretty good taking that, but I don't take it every day as I should, unlike my morning coffee blend. What's my opinion on Uniswap, also Ocean token? I mean, Uniswap's great. I'm not sure what they're going to be. I'm not sure how successful their token launch is going to be. They kind of had to pull that. They kind of had to pull that ace out of their sleeve because of SushiSwap's tomfoolery. I mean, overall, Uniswap is a really good decentralized exchange. They've been working on it for a long time. It's obviously the hub of DeFi. It's obviously where everybody's going. And I don't see any reason for that to quit, regardless of whether the DeFi craze continues as it is, because volume has really dropped off, and we're back in a consolidation area for DeFi. So I think a lot of people are expecting just for price to pick right back up, which it can. But overall, I would expect to see consolidation. Ocean token, I don't have a specific opinion on. I didn't get into Ocean token, so because I don't have money in it, I don't have a strong opinion on it. Need to get some Yorkshire tea in the post along with those Jaffa cakes. You know, I did really enjoy the Jaffa cakes, by the way. Thank you guys. I've got the box around here somewhere. I kept one of the boxes. I had to order them right from the UK, and they were delicious. I didn't eat them with any tea, so I suppose that is, I don't know if that's like a violation of the UK. Roy Coin says, could I explain the TD sequential? I absolutely could, and I have, sir. I have about an hour-long video on it here on the YouTube channel. It's actually our most popular video. I would definitely start there. All right, so signs of reversal here. All right, so ISIS giving the weekly sell signal. No new information here from ISIS. It is trending to the downside. No continuation long signal, which we would get if the dots were to cross above the line, but we don't see that yet. Kind of similar to what we were looking at with Minx on the weekly. That would be a good confirmation of that. As far as TD sequential goes, where did we get interrupted? Well, we were on a count to the upside, and we got interrupted on a 6, which I've said before. 6, 7, and 8, which is kind of broad, but it's usually 6, is where we will often see interrupted counts. And we did. We interrupted pretty harshly and violently to the downside, and good looking out ISIS spot for giving that sell signal and kind of that early warning. That's about all we see here on the weekly. There's really nothing suggestive of a huge reversal here on the weekly, except for that sell signal. There's really nothing here based on weekly reversal signals to let us know that price is so oversold that it's an attractive buy on the weekly. So since we do seem to have a weak bullish trend or a market neutral trend on the daily, on the weekly, what's the daily suggest? Well, the daily, the most prominent thing here is an active bottom feeder signal. So we got bottom feeder signals here, here, and here. So on the 22nd, the 23rd, and the 24th. So just a little less than a week ago. And that is suggesting a movement up to 11,145 with invalidation in that entry area at 10,167. Now, I commented on this a little bit yesterday. What's my opinion on Parachute token? I don't have one yet. On the daily here, I commented on the bottom feeder trade just a little bit yesterday when I was talking to Alexander, when I was thinking about what to recommend for new signals for this week. So we're just not in an optimum area. So I just kind of wanted to give a shout out to those who had been monitoring the bottom feeder trade, as well as on some of the precious metals that I talked about in my premium analysis yesterday. Good setups. And for those who caught those, they got a really good, basically average entry around 10,300, which was a really good entry area. So they're in good profits right now, up around 3% from that average entry. And we have not hit that $11,145 price target yet, but one can continue to hold that trade. I don't see any invalidation right now. All right, so the other thing that I want to point out, let's get rid of bottom feeder here real quick. We do see consolidation, no completed counts here. We're on a 2 of 9 once this daily closes, which would suggest downside, unfortunately. But there's a few ways to look at this, and I'm a little conflicted. So I'm going to take the long because that's the best statistical setup. But when I look at what this suggests, right, one of two things. There are several chart patterns that I like. So the one that I see here forming, and we'll talk about this more when we get to the chart pattern section, is a double bottom, right? We have a rounded bottom followed by a V bottom. That's the Adam and Eve structure. We can see this play out all over the place in cryptocurrency. It's probably one of the most prevalent chart patterns that we can actually see that does play out. When you correctly identify the rounded bottom followed by the V bottom. Generally, the V bottom, the second bottom has a higher high. And this also is very similar to the breakout pattern that I talk about a lot, where we have multiple tests of resistance. Here we only really have one, okay? And we form a lower high that is higher than 50% of the distance from the resistance high to the previous low, all right, or to the range low. Now, we don't really have that here. What we do have, however, is if we zoom out, we do have this highly contentious area where we have basically resistance here, we have resistance here, 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 and what have we done now? Broken out and back tested as support. I'll talk about that here in just a little bit. So getting back to the daily on our reversal systems here. Overall, I would say with daily bottom feeder suggesting that movement to 11,145 and Chris Moody's PPO basically being bottomed out in this area, confirming the double bottom. You can see it bottomed out here on the rounded bottom, and it's giving a weak bottom here shortly after the V bottom. All right, so that's confirming that. This is a weak bullish area, right? I do think the trade certainly here is to the upside, especially after the lower high. I would definitely try to play the double bottom here. And that's the trade based on risk to reward. I certainly think in the short term, but I would not drop shorts that one had placed in the $11,000 area. And overall, I would only recommend that trade to those who have a hedge on and have downside play in the market. If you don't have downside play, then what I would do is I would take advantage of this relatively high price level and I would begin putting on your short or put an initial short on. I would actually split 50-50. Well, I wouldn't split 50-50. I would probably apply, let's say 30% of what you would want to hedge with at this price level, and then look to hedge up probably all the way until we break above this previous high, until we break above this previous high at 11,200. So I would be taking profits on my longs and adding to my shorts because overall, I'll let you guys know that even though the market trend is to the upside, the reason why I'm holding my short is because I do expect in the macro, right, over the next few months for price to move down, unfortunately. And this is going to be in stark contrast to the fundamentals that we're going to go over here in a second. And I could be wrong. Of course, I can always be wrong. But the fundamentals were looking very good prior to the March meltdown. And why were the fundamentals looking so good? Why were the technicals looking so good? And then how could price plummet so much? Well, because an unknown event occurred in the market, coronavirus. And unfortunately, based on my research, which I've been doing pretty heavily over the last few weeks, I do continue to hold to my narrative that we're going to see a second wave of lockdowns. Highly probable. We'll talk about that here in just a few minutes. All right, so just to repeat, overall, I think that the trend is weekly bullish based on the weekly time frame. I think that a long trade from here makes sense from risk to reward perspective, but it doesn't make sense if you have no short exposure. If you didn't hedge, if you didn't short from 11,000, I would still continue to be looking for those price levels. And we are at a relatively high level of price, although it's possible that you get an opportunity at 11,200, even 11,400 to rehedge up there if we do plunge up. So far, however, the other thing that this could possibly be is a swing failure pattern where we make a high, we fail to make another high, and then we actually crack below support. Confirmation of that would come if we get a daily close below 10,149. But I like to be a little bit more aggressive than that because crypto moves very fast, Bitcoin moves very fast, and I would just go ahead and put the short on here and either be wrong or be right. All right, chart structure. For chart structure, we're going to go over here. All right, so obviously the most important thing, or the most obvious thing, is this descending trend line that we dealt with in 2017 and 2019 and 2020 briefly before actually breaking above it. All right, so this is an area, this horizontal line right here, if we consider where I have this yellow box right here, we can actually see this as a level of resistance here, basically here, 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 and finally breaking above. So what do we have right now on the weekly time frame? We have price retesting previous resistance as support, and we would like to see price push up from here. However, keep in mind that only makes sense on the logarithmic chart, and the logarithmic chart is generally not used for trading. The logarithmic chart is generally used to make one's opinion seem correct. Now, we can still see weaker, but we can still see that same level of previous resistance turned into support here. However, this is not a retest of the descending trend line. That would have to be all the way down in the $8,000 area, maybe even down here where I have this green box territory, which we'll get to here in just a second. But for the sake of argument, we'll put the logarithmic trend, or we'll put the logarithmic chart back on. Maybe it will be right this time. So Overall here, after completing the rectangle top breakout and hitting our upside target on that, we have pulled back down, and on the log chart, we've retested resistance as support. So I've made some measured movements of our next targets just based off the distance that price moved not only from here, the low of the March meltdown, to the next high, and also from the low that occurred from that to the next high up here. So based on those, and yes, we're looking at 50% extensions and 1.618 extensions, because when you're looking at uncharted territory, the Fibonacci extension tool is generally the best that you can do because we don't have a whole lot of market data. We have nothing to measure against. I'm not going to draw random arbitrary trend lines. I'm just going to say if price moves as much as it did, or a fraction of what it did, 50% of what it did, 1% or 100% of what it did, 1.618 of what it did, we should hit these price targets. They're not perfect. They're not magical numbers. They're just logical areas to take profit on one's Bitcoin position. Next take profit area would be up here. Between 12,784 and 13,000. Let me move this. 13,400. So let's just call it 12,800 and 13,500. So that's about 33% to the upside. The next area would be between 15,000. Let's just call it 15,000 and 15,800. That'd be about 55% to the upside. And finally, 100% movement if we get up here between 18,000. Actually, just call it 19,000 and 19,600, retesting previous all-time highs. That's 100% to the upside. Meaning, kind of your max upside right here. Well, your max upside might be theoretically infinite, but reasonably 100% to the upside is what we'd be looking for Bitcoin. And I think that's probably in the long term, super, super long term, a good, safe bet. Challenged Investor, thank you so much for the super chat. $2, my friend. Why is Theta so bullish in the current environment? Well, listen, Theta is a good project. I remember when Theta launched, there was a lot of to-do about it. You and I have talked about Theta a little bit. I have Theta. I have a small position in Theta. It's one that I've accumulated through trophy trading. So I've traded Theta quite a bit, and every time I've traded Theta, I've only taken 90% of my profit. I've taken 10% and just stored that away and stored that away and stored that away, and that accumulated the current position that I have in Theta. I haven't specifically invested in Theta. Maybe I've kind of slept on it, but again, there's things that I sleep on and things that I don't. Yeah, I mean, I've talked with Theta about you. I think Theta is a good project. Theta is certainly pushing forward with partnerships. And as far as a live streaming platform, if we compare it to things like Lino, if we compare it to things like, even if we compare it to things like Library, and if we compare it to things like, even Steemit and Hive, it's certainly killing it. It's certainly killing it. So I think Theta's probably good. Now, I would be careful though, because it does seem that there's a lot of hype generating around Theta. So if you're a short-term player, if you can get in and get out fairly quickly, that's good. But I always get really concerned to put in long, but I'm always concerned to create or invest in long-term positions when price has been moving up for quite a while. I generally prefer to, as I've told the premium members many times, based on that weekly horizontal support and resistance seminar and lecture that we did, I prefer to accumulate my long-term positions when price is relatively low. He says Theta is going to be a top 5 coin by mid next year. Get in there, man. At the end of the day, one has to trade their bias. I've been trading my bias on Bitcoin for quite a while. This last year, I've been trading my bias on Ethereum. And, it takes courage to sit there and put your money into something that may or may not work because you don't know the future. But that's what I do. And you get better at it as you go along. And you have overall had a really good eye, Challenged Investor. So I would not doubt yourself, my friend. Good call. Good pick. All right, let's see here. Oh, I wanted to point out downside support if we do break. If we do end up breaking this level of support between 10,200 and 9,700, that's our current support level. If we do break that, I do want to point out the previous measured move target that I had for the rectangle top. If it broke to the downside, I said 7,000 to 7,400. And maybe if we get wicks to the downside between 6,500 and 6,800. So if one wants to know where my buys are on my actual USD to crypto exchange, which, listen, boo if you want, it's still Coinbase, yes, but I also have funds on Kraken. Overall, I would like to completely navigate away from Coinbase, but they make things convenient, particularly for running a business, particularly the way that I have things set up. I'm a pretty firm advocate for privacy, and I do not really recommend that people get involved with Coinbase that extensively. I think they should research the better alternatives. For my day-to-day transactions, I don't use Coinbase. I do use Electrum, and I am actually getting more comfortable with Wasabi Wallet. But I'm one of those individuals that I know all my features and functions, right? And so if I'm going to make a big shift to doing things the way that I've done them on a daily basis, I need to be very comfortable. So it often takes me quite a long time to actually migrate away from a particular platform. So even though Coinbase has done some unfortunate things in regards to user privacy, I'm still currently, let's say, forced to use them. Not forced, but I choose to. All right, let's look at intraday setups. I would try and pick up the long here. I would try and pick up the long here with a relatively tight stop. We have Bitcoin driving back down to support. We've had this level of support 1, 2, 3 times, and we're looking for a second one right here. I would certainly try to pick up the long right here. I might be wrong about this, but that certainly is the trade setup that emerges from me. We have a lower low actually now on price action, and we have a higher low here on ISA spot, indicating a little bit of bullish divergence. And as well, we did have that ISA spot sell signal right here that did generate us here on the hourly. Did it give us that 1% profit that we look for? Let's see here. Buy signal right here. And 0.95, so close. 0.95, so close. And as well, we can see that funding is quite negative. It's actually gone down below negative 0.06. So yeah, I would definitely try and scoop up a long position right here. It certainly seems to be the risk to reward setup to me. Whether one wants to take it back to the top of the range at around 10,700, 10,750, or whether one actually wants to go for a previous retest of the highs at 10,900, the long here on the intraday makes sense. If we get what would be invalidation, well, let's see here. Let's just pull out Quadriga. That's how I would do it. I would use Quadriga. I would use Quadriga. I'd use a relatively tight stop. 10,600, I think, makes a good stop loss right here. If one stop loss gets hit, then I would consider that a failed movement, and probably you would want to shift to shorting the next correction. So when price retreats, makes a return back up to 10,680, 10,700, I would look to put on shorts from that area. It would be the intraday setup that I see. All right, so in summation, in summary, weekly trend seems weekly bullish. I think that one should continue to hold their shorts. I think that if one is not overall hedged, your primary focus should be picking up those hedges and picking up those shorts. If you're hedged and you're in a comfortable position, I think that you can speculatively play longs to the upside here. I would probably do that at about at about 25% of the normal risk that you normally do, unless you're really experienced and know exactly what you're doing, in which case you already know the difference between your high risk trades and your low risk trades as far as position sizing. Now, let's go look at some fundamental indicators, and then we'll look then we'll take some of your chart requests, or we'll move into talking about. I want to look at fundamentals, and then we'll piggyback off fundamentals into talking about why I think the market's actually going to move down broadly before it moves up. Okay, so the first thing that I want to look at here over on Glassnodes. This is Sandbase. Sorry, that's Santiment. All right, so go to dashboards, and let's do market tops and bottoms from Bitcoin. All right, a few things I want to look at here. Okay, first thing I want to look at is the Puel multiple. All right, Puel multiple. This is the Puel multiple over the last year. We've got the 7-day moving average on here. For those of you who don't know, I'll just go ahead and read this right here. The Puel multiple is calculated by dividing the daily issuance value of Bitcoins in dollars by the 365-day moving average of daily issuance value, meaning what is the value of a Bitcoin the day that it is minted, divide that by the 365-day value, and you get the Puel multiple. All right, so as we can see, and we've gone over this chart before, every time the Puel multiple goes down into the green or green box territory, it has always been an amazing buying opportunity. We can see this at the bottom of the market in 2015. We can see this at the bottom of the market in 2019, late 2018, and we can see this at the, we can see the first touch into this actually at the March meltdown, and then the second opportunity right at the consolidation area that we just talked about in around May of 2020, which led to this kind of last wave to the upside. So overall, this chart looks bullish to me. It is not in the green box territory, so it's not indicating the most fantastic buy. However, we have bottomed and likely will resume our movement to the upside rather than continue our march to the downsides based on the way that I've seen this chart maneuver. So I would label this chart bullish based on its historical performance over the last year. All right, Puel multiple. Let's look at NUPL, net unrealized profit and loss. All right. So this is the difference between the relative unrealized profit and the relative unrealized loss. All right. You can also calculate this metric, it says here, by subtracting the realized cap from the actual market capitalization and divide the result by the market cap. There's more information here. If you guys want, I will drop this in the chat because this is actually an interesting article. So anyways, NUPL, and it breaks this down into what phase of the market are we in? Capitulation, hope, optimism, belief, euphoria, and on the other side, capitulation, fear, anxiety, denial, or greed. Okay. As we can see right here, we are in the optimism or anxiety level, and we have previously dived into the hope and fear, and actually briefly down here into capitulation. So generally the way that I look at this chart and the way that I like to use this is what was the extreme that we were last in? Right. So the extreme that we were last in here was capitulation. So that's let's call that bearish, the bearish extreme, right? The bottom of the bottom, right? We have capitulation here. And of course, we have capitulation down here. And capitulation, as we can see, are buying opportunities. OK, we were previously in a belief denial. So we have not actually seen a euphoria greed yet. We did see euphoria greed very briefly at the height of here in 2018. Actually, sorry, this is the market high in December of 2017, which was the all-time high ever of Bitcoin, and we haven't seen a blue range yet. So being as we have seen capitulation previously, I would expect this to go up. I would expect this to move up rather than move from euphoria down, which it did previously here. We went through a cycle where we went from blue to red, so all the way from greed to greed to denial to anxiety to fear, finally to capitulation. And we have struggled to get our way back up. Previously, we did make it all the way to belief, only to be shot back down. However, I do expect this. If it repeats its historicity to move up toward euphoria and greed rather than down to capitulation. All right. The next fundamental that I want to look at is probably the best one, and that's the MVRV. So the MVRV, I do like to look at actually here on Santiment. They have this kind of nice default template here. Well, they'll show you the 365-day or the last year's MVRV, and then the 60-day MVRV correlated with price. And the way this works is if MVRV is low, you can expect, oh, this isn't letting me move the date. Okay, it's not letting me move the date, so I'm not going to mess with it. All this suggests is that if MVRV, which for those of you, let me read MVRV here. MVRV is used to assess whether Bitcoin is overvalued or undervalued relative to its fair value. When market value is significantly higher than realized value, it historically indicates a market top, and when the opposite, while the opposite is indicated market bottoms. All right, so this is just a Z-score of the MVRV, so market value to actual real value. And the way that I believe Glassnode does this is they take the difference between market cap and realized cap, and then to Z-score it, they take the standard deviation of market cap divided by the standard deviation of market capitalization. All right, so that's how they get the Z-score. Now, what I like about the Z-score is that the way Glassnode lays this out is just easier, right? There's less interpretation. Whereas if we look at the one that Santiment provides us, we kind of have to determine, well, what's low? All right. So again, very simply, the way this indicator works, or the way this chart works, is if the MVRV is low, it indicates that the actual value of Bitcoin is low relative to its actual value, to its fair value, indicating a buying opportunity. If MVRV is high, that indicates that the price is high relative to its actual fair value, and it indicates a likely market top. Not a good buying opportunity. So where do we see the MVRV Z-score here? Well, we see it far closer to the green buy zone. Okay, it was previously in the green buy zone throughout the consolidation in 2015. It was previously in the green box territory in the consolidation in early 2019, and it briefly touched down here for the March meltdown in March of 2020. I would indicate this as overall bullish as well. All right, the last two more. Reserve risk, which has been kind of a hullabaloo lately. So we're going to look at reserve risk, and I've taken the time to understand this a little bit better. I'll read the definition as Glassnode gives it. It is defined as price divided by HODL bank. All right. It is used to assess the confidence of long-term holders relative to the price of the coin at any given point in time. So if this tends to show if confidence is high, i.e., is the amount of funds on exchanges low? If the amount of funds on exchanges is low, that indicates that hodlers are hodling. If the amount of funds on exchanges is high, it indicates that hodlers are likely selling. So confidence is low. So if confidence is high, meaning there's not a lot of funds on exchanges, and price is low, then that means that there's an attractive risk to reward ratio to invest or buy this asset. If confidence is low, meaning there's a lot of funds on exchanges, and price is high, then likely we're going to experience a market top and individuals are going to sell. Where are we at with reserve risk? We are very, very deeply in the green buy zone territory, indicating that funds have dropped from exchanges precipitously. Although I would argue that there's a lot to be said about Bitcoin, particularly being locked up with third-party custodians that's not being calculated in this, right? They're not on. So because decentralized exchanges and DeFi has been such a craze, there's a good amount of Bitcoin that's been locked up into wrapped Bitcoin. Not a huge amount, not a massive, massive, massive amount, but a significant amount. To where I think that if one could find the correlation between that, I think this indicator could actually be updated a little bit. But I don't think it would throw it off that much. I still think that it would be pretty darn bullish. We're certainly not near a market top, and I don't think that price action indicates that as well. So reserve risk would indicate that we are actually bullish. So far, the fundamental indicators that we've looked at are actually quite bullish. Now, the last one that I want to look at is not a market tops and bottoms. It's a warning indicator. The warning indicators that Glassnode suggests over here are ASOPR, which I quite like, ASOL and MSOL, which are good, but they're kind of hard to read sometimes. Basically, all you're looking for are, make it very simple. When you're looking at the warning indicators, all you're looking for is there a huge spike? If there's a huge spike and price is up or high, likely we're going to get likely it's going to get sold into immediately. If price is low and there's a huge spike, likely price is going to get bid up immediately. But coin days destroyed, or CDD, I think is the easiest value for this, right? So basically we just look through here. Do we see a huge spike? That indicates huge movements. Do we see a huge spike? No, we do not. So CDD is pretty flat and neutral, meaning that I don't see any massive, massive, massive market shifting movements based on this indicator right now, either to the upside or to the downside. All right, and we're out of coffee. Okay, so that's a whole lot. Hopefully you guys digested that well. Hopefully that was helpful. So again, just to reflect, because it's easy if I just tell you what I'm doing with my funds, right? So I have shorted above 11,000. I shorted on my primary account. I used 1/3 of my actual Bitcoin to put on a 3x short on that account. I have funds on FTX and as well as on the BTC-USDT perpetual contract on ByBit. ByBit's the main exchange that I use for shorting or leverage trading in general. And I have taken a few plays to the upside, actually one long trade to the upside, and I will be looking to take another long trade to the upside here. However, the most important position, in my opinion, is the hedge, which has put on quite a lot of excess Bitcoin onto my account so far, as I've yet to close the trade out, and I think will protect me because I do think based on what we're about to talk about here in just a second, when we come back from break, that most likely the move is to the downside. I have to put my money behind that. I have to put my faith behind that because that is overall where I sit, despite the fact that the fundamentals look quite healthy. I think that we're going to experience a news-driven catalyst event that none of these indicators can predict. I think that price is likely to move to the downside along with all other equity markets. And after a pretty sharp punctuated move to the downside, which I do think is going to be an amazing buying opportunity for those who have not yet bought into Bitcoin for the long term, we are going to see all of these kind of fundamental indicators play out. So I think that buying opportunities are still there. Of course, I could be wrong and we could continue to move up from here. That would surprise me. Well, there's two ways that could play out. One in which would surprise me and one in which wouldn't. I would just be kind of chagrined, right? So we'll break that down here in just a little bit. All right. When we come back, we're going to go to break here real quick. When we come back, we're going to look at weekly Forex trades. We're going to look at precious metals as well as the 3 big indices, answer your questions a little bit, and then we'll get into the news and chart requests. Before we do that, I want to remind you guys that today's show is brought to you by the Cracking Cryptocurrency Premium Trading Group. Among the analysis that we do here on the show, we also provide premium analysis, premium trade signals and setups. We also provide our premium indicator suite, access to our online trading academy, which teaches individuals not only how to understand the charts, but also guides them through our Pathways to Profit strategy building creation course. So if you guys do not have a trading strategy and you're not trading with a strategy, or you don't understand risk management, we walk you through all of that as well. Access to our premium Discord, access to gigabytes of all our previous recordings, and our community mentoring and one-on-one mentoring. Depends on what package you provide. For more information, you guys can head over to premium.crackingcryptocurrency.com. Again, that's premium.crackingcryptocurrency.com for more information on that. Anybody, any questions, you guys can drop them in the chat. We will be right back. We're going to have a brief word from, as I said, the exchange that I trade on, ByBit, and then we're going to come back and look at Forex, precious metals, equities, and your chart requests. Be right back, guys. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at ByBit.crackingcryptocurrency.com and rest easy for a change.
Too short or not too short? That is the question. Whether it is nobler in the mind to suffer the liquidations and stop losses of novice traders, or to take arms against this outrage with a 100x long, and in doing so, buy Lambos. To buy, to sell, no more. And by no more, we mean... I don't know. Buy Bitcoin. Back to you.
All right, and we're back, guys. Sorry for the delay, but I'm going to put my long on. All right. Okay. So we're back. We've got some water. All right, so let's talk about some things, guys. Thank you guys so much for holding throughout the break, and hopefully you guys enjoyed the Bitcoin weather report and the ByBit advertisement. Victor says, is premium working 100%? I want to join the academy. It is working. It is certainly functional. It has been for the last almost 3 years now. And the academy is growing every single day. So certainly invite you to ask around or hit us up in the Discord. I'd be happy to answer any questions, as well as our support live chat is constantly available on the website. All right. So I want to talk about, before we go into a few other markets here, I want to talk about kind of the fundamental reason why I believe that overall the market's going to move down, kind of what catalyst I see coming in the future. And not to beat a dead horse, because I've talked about this ad nauseum quite a bit, but it's going to be coronavirus. I already see the signs kind of happening here in America. And because I talk to a lot of people around the world, things that I see particularly concerning, especially in the UK, and I know we have quite a broad UK audience, so please correct me where I go astray. I can only speak from the best of my knowledge and the best of my investigation. But governments around the world are extremely, it seems, either malicious or incompetent or ignorant when it comes to their handling of the coronavirus. And I already see the signs gearing up for a second wave of lockdowns preemptively. It seems that a good chunk of cities around the world are already in some form of restricted movement or lockdown again. After restrictions were lifted, they've been placed back in over the last month or so. To the best of my knowledge, there are areas, particularly in the UK, even in bigger cities. So that is not a good thing. That is not a good thing, in conjunction with the Fed essentially stepping aside from the markets, and central banks around the world essentially stepping aside and admitting that they can't handle this problem. Of course, we know this. We've known for a long time, us in the Bitcoin space, those who have advocated for sound money before Bitcoin was attractive to trade, before there was a lot of money, before DeFi, before Ethereum, before all of the speculation, before all the markets, those who saw the value proposition of Bitcoin as sound money, as something that was unconfiscatable, as something that was censorship resistant, those who saw the real value behind what this is, and those who kind of can see into the future and see that, well, this is clearly the better technology for human beings to hold value in. This is clearly the better technology for human beings to hold value in. And as annoying as it may seem in the short term, or as often as it may seem that, humanity is just bound to repeat the same mistakes over and over and over again, I think if you take humanity on a long timeline, you will see an exponential moving average or a simple moving average that just trends up, right? Humanity does adopt the better tools eventually. It just takes this time, right? This is why I've always said I am extremely bullish on humanity. I am very positive about humanity. I am not a naturally negative person. I am actually a very hopeful and positive person. But you just got to use limit orders sometimes. I wouldn't market buy into humanity at any given point in time, because there's always some kind of random irrational stupidity that we can do that sets us back 20, 30, 50, 100 years, sometimes 1,000 years. You guys have heard of the Dark Ages? Yes, we did that. So I think it's very likely that we're going to get a second wave of lockdowns. Combine that with just the absolute insanity that the American elections have put into the marketplace. And it doesn't matter for what side you're on. As somebody like myself, it doesn't really matter to me who gets elected, because overall I see agendas are put in place that push forward several hundreds of years. And the only difference between who happens to sit in the seat of power currently is a brief interruption or acceleration of those plans, right? There are publicly available plans based on not only the geography of the planet Earth, but also the governance of the planet Earth. And those plans are publicly available and largely ignored. And I'm not a huge conspiracy theory guy, but it's not conspiratorial thinking to think that, well, I have a plan for my life and where I'd like to see it go. I'm sure my city has a plan for the city and where they'd like to see it go. My state has a plan for the state and where they'd like to see it go. The nation has a plan, and they're different political parties. So it's not really conspiratorial thinking to step one step above that NC, and of course, we already have organizations like the United Nations and Trilateral Commission. We have things that already are actively engaged in coordinating intergovernment affairs toward, let's call it moving governments along toward a unified vision, towards some goal somewhere in the future. Okay. Anyways, so that doesn't change the fact that currently coronavirus came along and accelerated market collapse, right? It accelerated the weakness of the dollar. It accelerated the debt crisis of the United States. And we've never recovered from the 2008 financial crisis. If you want to say that the carpet was pulled aside and all of the detritus was unveiled for the entire world to see, well, let's say the financial markets, the financial sector, and the government did a pretty good job of slapping that rug back down and putting some bubble gum on it. They didn't actually fix any of the underlying problems. And what we saw from 2008 to, let's say, the market meltdown in 2020 was just an acceleration of that plan. This is why stonks only go up. This has been the cry of that. But things are fundamentally changing, and I think they're going to fundamentally change over the next, certainly in my lifetime, over the next few years, within the next 5 years. And right now, I think that the fundamental catalyst on my mind, and I talked about this, I think that I said either at the beginning of September we would begin to see it, or if not at the beginning of September, and again, I could be off by a few weeks because we're getting close to the end of September now and the beginning of October, but certainly as we move closer to the election, I think that one of the most likely things, I don't know if it'll occur before the election or if it will occur after the election. Of course, the instantiated power has a desire for it to not happen before the election, whereas the contender to the throne, let's say, certainly has the desire for it to happen prior to the election. But either case, I think that we're going to get a second wave of lockdowns, whether they start in the United States, because they're not starting in the United States now. They're starting in other countries. They're starting in the UK. They're starting in Germany. They're starting in Spain. They're starting in, I can't speak for Sweden, but I know those three in particular for sure. They're starting there, and I think they might spread inward. So whether or not it starts in the United States or creeps in the United States, I think that a second wave of lockdowns would trigger a market meltdown. That's something that can't be easily predicted by technicals or really the fundamental on-chain stuff that we've looked at. And it's for that reason that I feel far more secure in my short. Now, I could be wrong about this. Price could continue to climb and push to the upside. So there's always going to be technical plays to make. But at the end of the day, that is where I sit, and I have to put my money where my mouth is. So, and that's where I've put my money. So if here in like 2 or 3 months, if I have been, amazingly correct with my prediction, congratulations. If I've been amazingly wrong, hey, I can only do the best that I can. So let's, having said that, I wanted to touch on that, and let's get back into the charts so we can look at Forex. Andrew says, Guten Morgen, que pasa everyone, back from vacation. Hope you all did some cool stuff. Indeed. Let's see here. Let me scroll back through the chart here. Not through the chart, through the chat. Thank you, Robert. I'm going to be incorporating the Glassnode and Santiment into the daily show. Any thoughts on Celsius? I know that Celsius is getting shilled pretty hard right now. So, and I know that because like I'm getting hit up by their bots in Discord quite a bit. So I would, I don't have a firm opinion on it. I haven't looked at the chart, and I don't have a trade on Celsius. We have played Celsius before. So let's get into Forex here. And to do that, I'm going to go over to my main diversified chart. Honestly, there's not going to be a whole lot in the way of signals. I just want to give you guys an update. First off, let's look at the trades of the day. So the trades of the day that I wanted to look at were going to be soybean USD. Shoot. I think they actually, there it is. Well, here's the CFD, but I don't want to look at the CFD. I want to look at that's the, yeah, they took the Owanda one off. So we'll just have to look at this one. which is close enough. So we'll look at the daily here. All right, so we actually took the SOYB USD on Awanda. For some reason, they removed the support here. And let me get this pulled up. Give you guys the metrics of this trade. Actually, my hairstyle is pretty cheap, man. A couple Bics and Cremo is the shaving cream. Anyway, so SOB and USD on Awanda. We entered this trade on the 24th of August. 24th of August with an entry price of $9 and 9.098. So let's go find the 24th of August. So this is the date that we entered into this trade. There we go. So right at daily close right there. And there we go. And we took, let's see here. We took partial profits at $9.9202. Now, see, this is the CFD here on FXCM is different from the Awanda CFD. But the Awanda CFD was priced differently here. So we took profit at 9.202 and 9.549. And finally, we had our trailing stop loss get hit at 10.174. So essentially, if I were to correlate it here, it would be right about here. So we took profits. Let's see, we took profits about 92.02 right about here, and then our trailing stop loss finally got taken out here. So I'm hoping that the movement is about the same. So we averaged out from that. What did we actually average out? We averaged 5.80% on that CFD trade. Now, with CFDs, that's a big movement. I was very, very happy to get that movement out of the soybean USD. And again, I remember watching this for basically the 2 weeks that we had this this trade on. And again, this chart's just a little bit different from the Awanda CFD. But this thing only knew how to go up. It was a fantastic trade. So big shout out to the European traders who were following along with those. Now, the other trade of the day that I wanted to point out was Link USDT, and we just closed this one the other day. Excuse me, we just closed this trade yesterday. Was Link USDT. I want to give a big shout out to Alex for actually calling this trade. We entered Link USDT on the 13th of September. So right here. So he just nailed this second leg to the downside. It's just so beautifully here on Binance. And then we took initial profits. So we had an entry of $11 and 11.9061. So that's about right about here. Yeah, right about here. So not actually at the daily close, but right on that wick, right here. And we took initial profits at 10.2791, all the way down here, right about here. And then we hit TP2 at 8.652, 8.652, right about here. And then we had set our trailing stop loss. And then we ended up getting stopped out back at TP1. So entry, profit, and then the last 20% of our position was exited here. And we were able to average, let's see here, 25.78% from that Link USDT trade. So again, just a beautiful catch that we had. And we went ahead and updated that as closed out yesterday, making sure that all the members were on the same page. Other notable mentions, GXS USDT. I know we took this trade here to the upside. VIB BTC. Let's see here. This is actually one from a while ago. VIB BTC, I remember we entered. Let's see if I can find it. Maybe this one was from August. I know we had played VIB BTC catching. I know we caught both these trades. This one right here on this wick and this one here. XRP BTC. See here. I can't remember if we caught the long or the short on this. And then actually here is the theta trade. So again, theta, I'd say this chart only knows how to go up currently right now. So again, regular conditions apply. Am I going to tell anybody to buy into this? Absolutely not. If something's in a bullish trend, you buy pullbacks, you don't buy highs. Crypto Caveman, good to see you, my brother. But we'll talk about theta USDT here in just a little bit. And then Neo Bitcoin was another great trade of ours. Remember, we took this. Let me see if I can't find it here. I want to find the actual stats. Here we go. Neo Bitcoin, we actually entered on the 5th of September. And we entered at not 1219. Yep, here we go. So we actually entered on this candle right here. Great entry. And we averaged out 34.74% on that trade with profits taken at not 147, not 174, and then finally our trailing stop loss hit at not 1653. So, beautiful trade. No, sorry. That's not right. $174 and our last take prop. Seems like it's odd that that got hit. Should be not 1853. Anyways, beautiful trade. Beautiful trade for Neo BTC. All right, so we'll look at some more of the winners tomorrow. For now, let's go look at what we have open in the realm of Forex. So overall, we're playing long trending reversals. So the euro dollar. This is, I would say fundamentally, these trades are driven by our analysis that the dollar was going to rise, that the dollar had reached a significant level of support, which is going to be bad for assets and good for dollar. Yep, Jason. Yep, VIB was one that Jason called. Good call, Jason. All right, so the euro dollar, we entered, we have an entry on the euro dollar at 1.18132. So we entered 1.18132 right around here, catching all of this last weekly movement to the downside, hitting our first take profit at 1.16246. So right around 1.16246. Basically hitting the wick is beautiful. We've just moved our stop loss to break even, but I'm expecting to play the euro dollar far further to the downside here. Same with the pound yen. We entered the pound yen at 139.973. Let's see here. 139.973, right around here. So really catching this weekly reversal to the downside, grabbing all of this. We've hit our first take profit, and we're letting this thing certainly ride for now. So big reversals on the dollar, big reversals on the yen, and we can see that from the currency strength indicator. The pound and the dollar have pushed up tremendously. Shorting as well the pound dollar with our entry at 1.31686. 6. So not as good as an entry on this one, but again, capturing the majority of this weekly movement to the downside and this last weekly. Again, I have the area where I'm going to be putting on a trailing stop loss. I'm expecting this to continue to move down as well. Basically anything trading against the dollar, I would expect the trend to continue to the downside. The dollar Swissy was more speculative. We actually took this to the upside. Entry at 916285. Let's see here, 916. Yep, took this one to the upside on the daily time frame. And this one's hit our first take profit. And it's pulled back, getting kind of close to our entry here. But I'm happy with the trade. This was less risk, not as big as our big weekly reversals here. But again, wanting to take the dollar against the Swissy. It's a little bit more speculative, as well as the dollar Canadian, which we took to the upside as well. This one's hit our first take profit as well, and continuing to move nicely in our favor. The only one that I would consider dropping here would be the dollar Swissy if it actually comes back to our entry point. Let's see here. The Euro Swissy long on the Euro Swissy as well. We noticed that the Euro Swissy had been relatively stable, and the Euro could have kind of gone either way, so we decided to pitch it to the upside, relative to the Swissy at least, not the dollar. And we also took the weekly reversal on the Australian dollar yen, shorting that as well. And then, of course, our BTC position, or at least my BTC position, which I've marked out here. So I'm really not looking to add any new trades because I have a lot of risk. Me personally, we had recommended these at 3%. The weekly reversals, I actually did take at 5%. So the euro dollar, the pound yen, the pound dollar, and the Australian dollar yen. The rest I took at 3%. With the exception, actually, no, excuse me. The dollar Swissy and the dollar Canadian, I took at 2%. But yeah, that's a lot of risk, and they have returned a lot of pips, a lot of profit for those trades. So for those following along with the Forex trades, which is probably the second, actually right now it's been the most active signals that we've produced. We've produced signals for Forex more actively than cryptocurrency over the last month, I'll say. That's about it. Before that, it was very, very active on cryptocurrency. Because there were positions to put on. In a lot of cryptocurrency markets, there were more speculative plays to make, certainly. So I'm pretty happy that over the last month, I've largely just sat on my hands and just followed my rules. Sometimes you don't need to put on trades. Sometimes you just put on the trades that matter and you walk away and you allow them the time to play out. Sometimes they take weeks, sometimes they take days, sometimes they take minutes. In the case of Bitcoin here, and in the case of these Forex trades, weeks. Weeks, most likely months. So, yep, currently at 3% on the pound yen, 2.44% on the pound dollar, 0.59% on the euro dollar, because that's pulled back, 2.24% on the dollar CAD, and 1.47% on the Australian yen. Yeah, and it's not the way we always trade, but we identified the opportunities. We saw the dollar and the yen. I had a fundamental bias that the dollar was going to reverse. Here's what's interesting. I was talking about it, and I saw a lot of other individuals talk about this as well, that, oh, the dollar is in this massive level of support, it's going to move to the upside. But then I didn't see any of those traders actually follow through on that. They got their entries wrong, they got stopped out, and then they didn't actually stick to that fundamental bias. If you have a fundamental bias that something's going to happen in the markets, and you want to trade that, well, then you have to be willing to hold that even when the market seems irrational. Right. So, for example, if you think that Bitcoin is going to move to the upside and you know that price is bottoming out, well, then you have to get in a long position if you want to trade your bias. You either have to trade your bias, or you with conviction, or you have to trade based on a strategy. Now, those two are not mutually exclusive. I think that having a strategy and a fundamental bias can help. Particularly if you're looking for what to do with risk and position sizing, because there are going to be trades like, for example, here with these weekly Forex reversals, that I don't find these opportunities all the time, and when they come around and I feel strongly about them, I'd like to put capital behind them. Now, not excessive, not all in, but generally, but in this case, almost 3 times higher than the normal risk that I would use. Mervyn Skidmore says, due to my own stupidity, it's not your own stupidity, man. You have winners and you have losers. Got a big bag of YFI. It's down 30%. Should I dump or should I hold? So almost always when anybody asks me that question, the answer is dump, right? If your fundamental reason for holding YFI has disappeared, and if you just bought it to get it on that DeFi craze, you have to, it's a complicated question. You have to assess, how much money do you have in the trade? What would it hurt? What would it do to your overall trading account if that trade were to go to zero? And, are the reasons you put on the trade still valid? If the reasons you put on the trade are still valid, I would do nothing. I would sit on your hands and I would wait for some kind of signal. If you put on the trade and you're just feeling the pinch and feeling the pain, almost always I tell people to get out of the trade. Because taking a known loss now is better than dealing with the anxiety of what might not come or what will come, okay? So whenever we put on a trade, I highly recommend you know several things. One, where you're going to get out with a smile on your face, i.e. what's your take profit. Where you're going to get out with a with a frown on your face, what's your stop loss. And 3, what are the reasons you put on the trade? What are the things you need to see to get out of the trade or, get into the trade? With things like DeFi, YFI, stuff that's relatively new, and we're not really using a lot of technical analysis. We're mostly just, with DeFi, when it comes to DeFi, most people are just buying whatever Ivan on Tech shills, or whatever they're hearing about on WeChat if they're smarter, or what they're hearing about on Telegram if they're a step down the totem pole. So yeah, you can still have the same reasons though. You can still have the same fundamentals, right? You don't want to be a bag holder. I don't think that YFI is likely going to go to zero, but I'm pretty neutral on altcoins right now. I know that some of my friends I've talked to feel differently, but I think the market's going to largely move down, and I think that the first things that we're going to see move down are altcoins. All right. What am I expecting for a good reentry for a long position on Bitcoin? So if we actually do end up fulfilling this punctuated move into the downside, it's very hard to predict. But again, I would say 6,000 to 7,000. That's where I have buy order. That's where I have buy order set. 6,000 to 7,000. Okay. So that's Forex for us. I do want to look quickly at gold. So we'll look at ZAO USD, CFD on Awanda. Here on the weekly time frame, we do have a topping pattern here on gold. We have a big blow off top, followed by a big weekly bearish engulfing candle in a second. So I just have to look at where the volume is, where the size of the candles is going right now, and it is to the downside. Now, I don't feel very comfortable taking that trade here on the daily to the upside here. Excuse me. So, oh, come on now. Let's go back to the weekly. All right. Let's go to the weekly. Let's look at our CC EMAs. All right. So, same thing though here. I would say overall, clear bullish trend on the weekly time frame here for gold. Now we've pulled back to the weekly 21 exponential moving average, the 8 and the 13. That means we're in the consolidation area. And if you are bullish on gold, then this is certainly a pullback that one can buy for the long-term positionally. And overall, I think that's a good idea. I think that gold, as well as stocks, as well as Bitcoin, if we have a second wave of coronavirus and lockdowns, they're all going to move down just like we saw back in March. That means nothing is safe. It's a risk to safety. You're going to see the dollar skyrocket. And basically all risk on assets, which gold is a risk on asset, move down. But that doesn't mean that this is still not a good positional area to pick up gold on a weekly pullback. All right. No Minx continuation signal. Wadatar explosion is actually suggesting a trade to the downside, as is Parallax here. But again, if we just look at our EMAs here, we can see that price has price became diverged from our EMAs and has pulled back to our median level of price. And again, we can see our 200, our 100, our 55, everything is actually trending to the upside here. So overall weekly bullish trend. Now on the daily. On the daily, we can see a sweep of our previous lows, generally a decent buyback opportunity. But again, whenever I take these reversal trades, I don't take these reversal trades when we like sweep lows back up to new highs. I just take them back up to either previous support, which I expect to turn into resistance, or back to the middle of the range. So if I were holding gold, I don't see the risk to reward to buy it here. And I would be looking to take it somewhere like 1915, maybe 1940. All right. Now that's also strengthened by the reversal signal that we have here. We have bottom feeder giving a daily reversal signal here on gold. But again, it was only signaling, it signaled here at the lows of 1863, and it signaled here at 1868 for a movement up to 1900. And that's pretty much done. Let's just say that's completed. All right. We have our 6 count, 6 of 9 to the downside on the daily interrupted. We now have our first 1 of 9. I'd want to see at least a few more days for this to play out. And overall, if we just look at PTP, PTP is not suggesting a trade till we're back above 1960. So we're in a bearish trend with a potential reversal right now. So price is moving to the upside. We have a bearish trend, so reversal would be price moving up. But again, the overall strategy would be shorting the correction, not longing the dip. So weekly, not a bad time to pick up a position for the long term. Daily, I don't really see an attractive trade. In fact, we're coming to the conclusion of an attractive trade, which would have been that bottom feeder signal. So congratulations to those who picked that up. So overall, I don't want to do anything on gold except for hold my long-term gold. And I don't really feel the need to pick up gold here at this price level. But again, not bad for those who don't have any exposure. But be prepared for price to potentially go lower with everything when the market moves down. All right, silver. Now, I'm a little bit more bullish on silver, although it's going to follow the same platform. So here on the weekly, I'm a little bit more bullish on the fundamentals of silver. But again, that's not going to change. I feel like I'm going to have to stop mentioning this, but okay. So silver was moving out of consolidation. We do have our long-term EMAs moving up here on the weekly. And again, same thing. Prices dumped back down to the 21 weekly exponential moving average, and we are pushing to the upside. Not a strong buy signal. Again, not a bad opportunity to pick some up for those who want to play the weekly pullback. This is going to be positional trading, so not short-term trading. So this is going to be silver that you hold for a long, long time. Let's see here. Do I see reversals imminent? Yeah, we did have the reversal, the completed 9 count up here, and the sell side signal. We are on a 3 of 9 to the downside here on the weekly. So overall TD bearish trend. We do, funny enough, we have a weekly bottom feeder signal though, which is suggesting price moving up to 27.25. But keep that in mind with the fact that CM Laguerre is overheated here, the ISIS spot sell signal, and the red count to the downside. So that's something that I didn't mention with gold as well. But despite what the EMAs would suggest is that we've reached a level of support and we can bounce from here. we do have quite a bit suggesting, well, we had nothing really suggestive here except for the fact that we were overheated. We got good sell signals, and heating them would have made a tidy profit. Let's go down to the daily and see basically the same thing with gold. Yeah, we have an interrupted 6 count, price moving to the upside. Here's that daily bottom feeder signal and price target of 24.43, which is overall done because we had entries at 22 and we had entries at 23.16. So I would say that that trade is done, and there's not a lot of risk to reward there. The daily, so the daily is oversold. The daily is oversold both on CM Laguerre and ISASpot. So we might actually get a little bit more movement here to the upside, but I would like to see a bit of a double bottom, maybe a rounded bottom here before I want to take this. So I don't have any, I'm not playing any trades on silver here. Kudos to those who are being a little bit more aggressive to me, but if I want to take another long, I'd like to see another double bottom and some signs, a little bit more evidence that we're actually going to make more of a charge, more of a push up here. And if that means I'm missing movement, that means I'm missing movement. All right, so that's gold and silver. And we did weekly Forex trades. Let's go look at the ETFs here real quick, just the big three, and then we'll get into today's news. All right, so we'll look at the DIA. All right, which is tracking the Dow. Let's go to the weekly. All right, so again, the Dow, the DIA ETF anyways, made an attempt to crack its previous all-time high. It did not, sold off. What do we have right here? I really think that we do have, I think the first thing that we'd see is a pullback in a bullish trend. And I think we can confirm that if we throw up our EMAs. Yep. We do have our 13 breaking above our 55 after being below quite a while. And we have our first kind of significant pullback to the 21 weekly exponential moving average and the 55. Overall trending to the upside here as well, despite the little burp that we got here with the March meltdown. Some say stonks only go up. That would appear to be the case here as well. So I think, again, kind of similar on gold and silver. If you want to play this weekly pullback, that's fine. I would be taking it to the previous high here on the DIA, 287. Or if you want to shoot for new all-time highs above 300, that's fine. That would be invalidated if we do get a weekly close below the 55 here at 264. All right, the other thing... However, the other thing I got to mention, all right, if we go over here to the weekly though, we're still on the weekly, perfected 9 count on TD sequential, sell side signal, overheated CM Laguerre. ISASpot didn't give a sell signal, but it was damn close because we weren't in overbought territory, but it did cross under darn close to that overbought territory. And we're on a 4 of 9 to the downside. So, yeah. So that's going to be risky to me. Now, just because this was telling, so I want to keep this clear. What the EMAs are telling you is that based on the average price, based on the exponential moving averages, you're potentially in an area where you can buy and take price to the upside, okay? None of this necessarily conflicts with that. It's just telling you that you are in a kind of danger zone, all right? Now, keep in mind, we've looked at many, many times where we had overbought signals on Bitcoin and price just continued to move to the upside. So it's not foolproof. It's not as if there can be no profit potential. It just means that you're taking a riskier trade. Now let's go to the DI. Let's go to the daily. The daily is, of course, a little oversold. And we do have that same bottom feeder signal that was going crazy all throughout this section right here, all the way from the 21st up until the 25th, looking for a movement up to 277.24. I think that is largely, we can call that completed. The wick barely missed it. And so I would say that that trade is completed. CM Laguerre being a little oversold, and ISASpot was briefly oversold here. Again, not exactly oversold, but touching the threshold and pushing back up to the upside. Yeah, I think overall buying opportunity, but again, high risk when we look at where we are based on the weekly. So I don't really want to do anything here with the DIA. If you guys want to be really aggressive on stonks, that's fine, but I think that probably overall the better place is to be positioning for that short similar to Bitcoin. But because I have more capital in cryptocurrency, I don't really need to position that way. And we're going to see the same thing on the Qs. We have that perfected 9 count here on the weekly. We continued to push up. We did reverse. We are overheated on CM Laguerre. We had that sell signal right here on ISASpot. And again, very similar to that 9 count on TD, we did have another little bit of a leg up here. We're just right back down at support here now. Yep, we're on the Tenkin. I bet we're right back at our, 21 weekly exponential moving average. We haven't broken down below that yet, 258.98 on the QQQ. So again, you kind of have to flip a coin here. I don't have a strong opinion on these. I think taking price to the upside is fine, but I think it's high risk. So for that reason, I'm not going to be having long exposure currently right now to the Qs or to the Dow or to the SPY. Either. Same story on the SPY, coming down to the weekly 21 exponential moving average. If we look at our reversal indicators here as well, we completed it. It's beautiful, guys. If you guys actually pull out TD sequential on the weekly, it really can help you know. It's one of those things, like when it nails it really, really well. Perfected 9 count and price just moves down from there. Overheated CM Laguerre and ISA Spot got overbought and is correcting to the downside here right now. So the daily's a little oversold. I think we can see the logical bounce that we are seeing right here, but I think overall the trade would be to short the correction, not long the dip, because the optimum entry price is beyond us. Again, here's the bottom feeder signal on the daily, pushing price up to 335.83, and again, that trade's basically done. So is there risk to reward to enter long on either the SPY, the Qs, or the DIA right now? Absolutely not. Absolutely not. Let price get a little bit higher, and I'd say short it. I think that's the trade to take. Okay, so that is going to be basically our huge, big market wrap up, guys. Big market wrap up. Hopefully that was helpful to you guys. All right, now let's see what time we got. We got 1:34. All right, we're going to get into today's news with our crypto currently segment. Before we do that, let's turn to the chat. All right. We've got some of the Hex spots in here. Oh, that's cool. Shout out to everybody who made money on Hex on the way to the upside, but I don't think it's going to replace enough amount of CDs to be super consistent or effective. I am Johnny 5. I am alive. Certificate of deposit. In other words, it is a piece of paper the bank gives you for giving them actual money, and they give you theoretical interest on it. Andrew says, debates are 9 p.m. Eastern Standard Time. Go get your popcorn and beer ready. The old men are going to be going at it. I'm probably going to watch it for entertainment purposes, but one thing that I've noticed has really improved the quality of my life, and I have to talk about this. So, for example, I don't pay attention to the news that is thrust at me. So, mainstream media news. I have carefully cultivated the news that I pay attention to, and I have noticed a massive improvement in the emotional quality of my life. So often people will ask me like, hey, have you heard about this, 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 and this? And I'm like, no, I'm not up to date on that. And they look at me like I have a fourth nose growing out of my face. Like, how could you possibly not know what's going on with that? Because the answer is it probably doesn't really matter in the long term. What's really interesting is over the last few years, as I've stopped following mainstream news, it may appear on the outside like I'm less connected with what's going on, but in reality, I've found that I'm really just paying attention to stuff that matters more, right? So instead of, for example, caring what Trump says or what Biden says or what any of these pundits do or what's going on in this city or what's going on in this city or really anything that nobody's going to care about in like a month, I instead like focus on the Federal Reserve and interest bank policy and reading Mises and, reading Murray Rothbard and paying attention to like technology news and, what's on the latest edge of cryptocurrency and all of these things that actually matter a lot more in my life. And it takes a lot of time to carefully cultivate your news feed like that. But if you can pull it off, which you can, you guys absolutely can. I find myself being more educated and informed and having I have unique opinions, right? So if I'm at a dinner party, for example, and people want to talk about something, I notice that people tend to say roughly the same thing, kind of like talking about the weather or water cooler conversation. And the stuff that I want to talk about is like people tend to be engaged by it because it's something that they haven't heard before. So I've always been the guy over the last like 3 or 4 years that wants to talk about Bitcoin, and that's unique and interesting. So cultivate your own unique opinions, I think is probably the moral of that story. And I think you guys will live a happier life. Would I interview Richard Hart? Yeah, absolutely. Tell him to come on. Cobra Kai never dies. Don Candon with the 20 crones says, thought you were gone forever with our money. Don Candon, well, when you throw pennies at me, I will certainly run away with the pennies, brother. No, my friend. No, my friend. As usual, I had some fun at the Treasures Gentlemen's Club, but the feds caught up with me. I was able to do a nice quid pro quo with them, and overall I've pulled myself out of Fed prison, and here I am back again, chained, locked. Let's get into today's cryptocurrency segment, guys. Let's go. All right. As usual, late on the links. Let me get these links up, guys, so I can just go through these. Had the wrong tab up. We're going to be talking about the KuCoin Hack. I've only purchased a few things on KuCoin, and I've moved them off immediately. Unlike Binance, where I've actually purchased things and held some funds there for a while. Anyways, will I interview you, Philly from Manchester? Yeah, sure, man. That would be an interesting one. All right, guys, here we go. So on Saturday, the major cryptocurrency exchange KuCoin was breached in a major attack by hackers who apparently got their hands on about $200 million in stolen Ethereum because they got the private keys to the exchange's hot wallets. I believe it was 2 hot wallets. We'll break that down here in just a second. Now, with the dust now settling a few days after the actual hack, we have learned a few more details about the extent of the actual exploit, or let's say of the damage caused by the hack, or at least to KuCoin's holdings in the heist, not to mention their credibility, because nearly $200 million worth of Ethereum, Bitcoin, Litecoin, XRP, BSV, XLM, TRX, and USDT was potentially stolen, including, excuse here. I don't think that you need to be worried too much about the Stellar, the Tron, or the Bitcoin Satoshi's vision. I wouldn't worry too much about that. All right, just one second. Speed this up a little bit. Yeah, there we go. All right. I like it. I like it. Now we got to make that faster. There we go. All right. So, like it or not, this is the 3rd largest hack in cryptocurrency history. I don't actually have the other two, but let's go to our first link. So, according to Larry Cermak from The Block, his analysis puts the total loss estimated closer to $280 million, not the $200 million or the $150 million from KuCoin's official statement, because KuCoin's official statement insists that the actual funds add up to only $190 million in total, saying, so I did some accounting of the KuCoin hack based on the wallets very likely associated. Based on his estimation, there was nearly $280 million of assets stolen, not $150 million. This would make it the 3rd largest hack in history, 7 times larger than the Binance hack last year. So we have the amount here. Most of it was ERC20 tokens, then Stellar tokens, and then Bitcoin and TRC20 tokens, followed by XRP, Ethereum, Tron, BSV, Litecoin. So letting us know, I mean, this kind of makes a whole lot of sense that as far as Bitcoin and Ethereum and other more established coins, there was less volume, less liquidity for these things. Remember, Huobi is Asia's #1, or was anyways, before the, sorry, not Huobi, KuCoin. So forget that. I was going to mention that the thought that occurred to my mind there was that Huobi was Asia's #1 OTC to crypto desk, right? And the fact that DeFi coins or ERC20 tokens, because all DeFi coins are pretty much ERC20 tokens, have been so liquid and in demand, it would make a whole lot of sense. And because they're new, it makes a whole lot of sense that they don't have the firmest kind of cold storage solution set up for them, that they're mostly holding them in hot wallets because the demand for them is so high. So it makes less sense practically to constantly transfer all these ERC20 tokens to some other wallet that's not online, that's not hot, because the liquidity is so high for them. But that creates this opportunity where you have all these funds in a hot wallet, and all a hacker has to do is hit it at the right time. So KuCoin did a live stream recap where their CEO Johnny Liu assured customers who may have lost funds, basically all of you, that they are going to do their best to make their users whole again. In fact, he was like, we're going to make you guys whole again. Now, the only person in cryptocurrency that I trust to fulfill that promise is CZ. So we'll see if Mr. Johnny Liu can actually live up to that. But there is some evidence that that's likely, because they do have an insurance fund that they had set aside, and according to them, and from what we know, no cold storage funds were actually affected. So in this statement, KuCoin describes the chain of events that occurred on Saturday when the actual exploit occurred, stating that they first learned about the breach when their security systems flagged large amounts of cryptocurrency being taken out of these hot wallets in the form of withdrawals, when they noticed all these withdrawals taking place. But they were powerless to actually stop the transfers taking place. Seems like decentralized centralization comes with a cost, right? Among the tokens the bandits made off with, again, included $152.7 million in Ethereum and Ethereum-based tokens, $10.8 million in Bitcoin. I'm going to speed this up again. There we go. Boom. 4.4 million in XRP, $1.2 million in Litecoin, $2.4 million in Bitcoin SV, $701,000 in Stellar, $4.7 million in Tron and Tron-based tokens, and $14 million worth of Tether. Right? So according to this expose from the CEO, KuCoin scrambled to notify international law enforcement about the hack immediately, and they contacted all the other major crypto exchanges like Huobi, Binance, OKEX, BitMEX, ByBit, and crypto projects and blockchain security experts so that they could try and get all the assistance that they could to mitigate the damage that was done to them. And to this effect, Johnny Liu here in this live stream stated that there has been some success in neutralizing some of the stolen tokens. And we've seen this quite often with other large exchange hacks before. For instance, the Bitfinex CTO Paulo Adreno confirmed in this Twitter post, that Tether froze a total of 20 million Ethereum based USDT and a further 13 million EOS based USDT as well in their response to the incident. Right here, public service announcement, KuCoin Hack. So Bitfinex froze 13 million Tether USDT on EOS, and Tether just froze 20 million Tether USDT sitting on this Ethereum address as a precautionary measure. So remember, it's not just USDC that can whitelist or blacklist addresses. Other projects, such as the team over at Ocean Protocol, moved to freeze their tokens and remedy the situation themselves. So Ocean Protocol froze more than 21 million tokens. That was worth about $7.8 million, and they're now instituting a hard fork as a way to reverse the damage. If this reminds you of the original Ethereum Classic hack, that's because it's basically the exact same thing, just minus the DAO and insert KuCoin as a centralized exchange. So KuCoin worked with the Orion Protocol team in order to complete a token swap worth nearly $9 million to replace stolen funds. Velo Labs did something similar. About $70 million worth of their tokens were redeployed with KuCoin as a way to recover stolen funds. So there's a lot of... It's funny that a lot of so-called decentralized protocols really scrambled hard to fork in order to neutralize stolen funds or blacklist addresses in response to this. Some projects, however, and their governance chose to stand down because code is law. One such project that allowed for the hacker to move and sell their tokens was Synthetics. The founder, Kane Warwick, chimed in via Twitter to explain here. Right here, here's Kane Warwick, founder of Synthetics, says, I've had a few pings about the KuCoin hack over the weekend. just to save my DMs from turning into even more of a dumpster fire than usual, here's my thoughts. They're my own. They don't represent the collective views of the synthetics community because obviously, lol. I think I like this guy. But overall, he starts off in this thread by explaining that when an individual deposits funds onto a centralized exchange, they inherit all the risks and responsibilities of doing so, and that they all fall on the end user. And that when you deposit funds to a centralized exchange for little reason besides long-term storage, well, it's not a good idea and you should know better. Furthermore, he goes on to talk about the stolen SNX tokens from the Synthetics project amounted to less than 0.5% of the total supply, and therefore there would have been zero chance the community would have actually agreed to what they call an SIP, so a Synthetics Improvement Protocol fork, in order to secure the funds. So A, not financially worth it, and B, they deposited to a centralized exchange. They should have known the risks. So he called any such action or movement to do a fork as just plain dumb, and he would vote against such intervention, citing how it would also tarnish the core principle behind DeFi, or at least SNX, if the protocol undertook such action, meaning that in this guy's mind, code is law, and those are good projects, in my opinion, or at least the people that we need in the space. And if you are wondering how the hackers were going about dumping all of these stolen ERC tokens, well, it does seem that this is the first time a major crypto heist has turned to a decentralized exchange, in this case, Uniswap, the largest decentralized exchange out there, to liquidate their ill-gotten shitcoins in exchange, of course, for Ether. So as soon as they completed this attack, hackers began selling off Ocean, for example, and Synthetics on Uniswap. 130,000 Ocean tokens were swapped on the decentralized exchange before the team was able to pause the contract and suspend its on-chain activity before they came about with a more permanent solution in the case of hard forking, which is what Ocean Protocol did. SNX, Synthetics, on the other hand, as I said, chose to abstain from such action, but this does leave many more ERC and DeFi tokens that are still held by the attackers that are potentially ready to be dumped at any time using the Uniswap or other decentralized exchange protocol, which just so happens to serve as an unintended mixer for all of these tokens being dumped onto unsuspecting users while the attackers make away with relatively clean Ethereum proceeds. So keep that in mind. If these tokens are blacklisted by the actual protocol, and you're using a decentralized exchange and you swapped your Ether for them, well. So as the hackers dumped their funds onto Uniswap, for example, liquidity was hit hard. And the price of these tokens was naturally affected as well, but the damage isn't over yet. The KuCoin fiasco is now spilling over to Uniswap, as it's the first time that such a high-profile crypto hack has used this particular decentralized exchange as a one-stop shop to cash out all of their gains. Now, this is causing a lot of people in the space to be concerned that it's going to bring unwanted regulatory attention to the leading decentralized exchange in the space, i.e. Uniswap. After all, Uniswap has grown exponentially in popularity, while centralized exchanges are busy clamping down with KYC and AML measures, i.e. AMLD5. Now, Uniswap's managed, obviously, to capture a great deal of daily trading volume, and I would say that this is largely due to DeFi degens and Ethereum gamblers everywhere. But now that we've had really our first high-profile hack worth hundreds of millions of dollars and seen Uniswap as the prime area to dump these and cleanly mix your funds, this is a problem that's now on Uniswap shores. And we kind of have to worry whether authorities are going to wake up to the activity occurring on Uniswap and bring the entire matter of decentralized finance to the attention of financial regulators. So basically, I'm suggesting that spillover effects from something like this may be quite disastrous for the space and have unintended consequences, but I don't know, and more certainly will be yet to come. So let me know what you guys think down in the comment section. What do you guys think are going to be the unintended consequences of this KuCoin hack? Do you guys agree with the approach that Synthetics took, for example, by saying that code is law? I've always stood by that approach. Do you guys think that Ocean Protocol was right and quickly hard forking the coin and trying to preserve and prevent the damage to their token holders? There's really two ways to look at it. Either, hey, we're so committed to protecting our hodlers that when something that we didn't intend happens, we will quickly step in and fork the code. But also lets you know how little governance is actually decentralized. Governance is quite centralized. And in the case of SNX, it goes to show basically who stands behind their core values. But again, this could be argued either way. So let me know what you guys definitely think about this. And if you guys know anything about the KuCoin hack, if you guys have further information on this, I'm always happy to dive into it as quickly as I can, or as deeply as I can. And with that being said, it is 1:53, so we've got just a few minutes. The other story that I wanted to cover is going to be on DeFi, but we don't have quite enough time to cover it. We'll touch on this tomorrow. So let's hop over here and take your user submitted questions and just have a little brief chat. All right, and here we are back in the platform. Let's take a look at the chat here, guys. Cornholio says, is it a good time to hedge Bitcoin at current price? Yes, I do believe that. How much is your house worth? Is the dinner guest bore? Indeed, indeed. Midwest Attempt saying, if we can get the likes back up to 50 per show, you guys know you want it. 50 likes per show is probably not the likes we deserve, but it's certainly the likes we need. Make sure to smash that like button, guys. It helps us out more than you know. Hardware wallet, see crypto tag. Yep, I highly recommend a Ledger X and a crypto tag as well to secure your seed phrase in stainless steel. Actually, it's titanium, excuse me. It's bulletproof. Caribbean Crypto Show, can I give my thoughts on the Zcash upcoming halving? Let's pop in and check on Zcash here real quick. All right. Well, certainly Zcash has fallen off in the last few weeks. It's got its upcoming halving, I think, on the 1st of November. So I think we can actually see another push here over the course of October. And it's possible that it's already been sold off. It's possible that the news has already been sold off. Let me take a gander here. Yeah, pretty hard sell off here on the weekly. But I think that Zcash looks to be in a buying opportunity actually here for me. Yeah. Zcash looks like a buy here for me. Show you guys what I mean. Yeah, Zcash certainly seems to be more of a buy than a sell right here at current price levels. We can see on the weekly, prices had a pretty steep sell-off after making a new high. And so based on that, as well as the halving coming up, I'd like to take Zcash here, at least for another run back up to these highs around 85. That's a pretty good appreciation, maybe even more. But I would certainly sell kind of at the first sign of overbought, kind of at the first sign of anything overextended. Yeah, here on the daily, we just had this beautiful buy opportunity, perfected 9. Look at bottom feeder just going crazy this whole way down. CM Laguerre overextended to the downside. ISIS spot giving the buy signal over here. Not the perfect buy signal, not the buy signal that we deserve, but maybe the buy signal that we need. And regular bullish divergence as well in conjunction with a perfected 9 count to the downside on TD sequential. It may not be the best buy opportunity here, but I think broadly, I think buying around this area is going to be rewarded. And to such a degree that I'm actually going to put this on my watch list for a potential signal. All right. Atessa saying Ethereum has never been hacked, but BTC has had 2 inflation bugs already. I think that's highly disingenuous. For example, if you look at the fact that there are so many tokens that are not created with the ERC20 standard, if you look at the fact that so many ERC20 tokens are being created right now, if you look at the fact that so many tokens are being created right now that are basically being copied via projects like Remix, with bare bones tutorials from Open Zeppelin, and they're going around and they're trying to change a few things, sometimes with unintended consequences. I mean, we're having basically every other day situations like DAO hacks occurring in Ethereum, and so far there hasn't been one to mitigate the whole platform yet. That's had super high reaching events. But look at the DAO hack. Bitcoin has never had a Well, again, we can sit here and do yeah buts, but I'll just talk about the fact that Ethereum has had a massively contentious hard fork involving just millions and millions and millions of dollars with the DAO hack. It's chain split into Ethereum and Ethereum Classic, which I would say is far different from the big chain split that Bitcoin had, because with Bitcoin, it wasn't an issue over funds being lost. It was a debate over scaling. And so the big blockers forked off to Bitcoin Cash, and then later on Bitcoin SV. And then there's been Bitcoin Gold and Silver and Platinum and blah, 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 Bitcoin Diamond, all crypto dividends as far as I'm concerned. And so Ethereum has certainly had its share of issues, plus the fact that Ethereum is going to be doing this pretty contentious movement to Ethereum 2.0 and staking, which may or may not work. Whereas Bitcoin has for 10 years been steady as she goes, stable and a safe store of value. So listen, all of this, I'm certainly not going to die on the hill that that Bitcoin is foolproof. All of this is code. Code can get fucked up. So I'm not going to die on that hill. What I will say is that Bitcoin has a very successful track record, and so does Ethereum. Visuals by Vlad says, what exchange do I use to trade all these securities? So I use, my largest traditional stock exchange is going to be Charles Schwab. However, I do recommend Webull for individuals that are looking to get into it. It's a pretty user-friendly platform, and you get a lot of free stuff for getting in there. So I like getting free stuff if I can get free stuff. Webull.crackingcryptocurrency.com if you want to get 2 free stocks. But I use Charles Schwab for my large money transactions. That's where I trade ETFs. And that's where I trade individual stocks, but I don't really trade individual stocks. I mostly just trade ETFs. But that's where I have my dividend portfolio as well. I also have funds and dividend stocks on Robinhood and Webull, but I've been transferring funds off of Robinhood for the last 6 months, as I said I was, ever since their issues. Let's see. Secondly, I trade CFDs and Forex on Awanda. And then I trade my leveraged products on FTX and ByBit. I do most of my damage on ByBit. That's where I have the majority of my capital. And then I trade on Binance, is where I trade my altcoins. However, I do sometimes accumulate positions from KuCoin. I have bought a few things off Huobi. I've bought off Binance US. Yeah. So I'd say the exchanges that I use on a day-to-day basis are going to be ByBit, Binance, and Awanda. And then intermittently, I'll use Webull or Charles Schwab, and things like KuCoin, for example, and Uniswap. Uniswap is one that I've been using relatively recently. What are my thoughts on Ethereum T? I think it's going to move just along with Bitcoin. I think it's going to move in exactly the same way that Bitcoin does. Just do it, Andrew Munn says. Just trade them. Luke Case says, can you share your thoughts on Rep? Greatly appreciated. Love your channel. I really like Rep. I think it's a good project. I don't have any particular thoughts on it right now. I know that 2 people that I've talked to over the last few months are quite bullish on Rep. Good to see you, Taurus. Squeaky Tadpole says, I think eventually the community could create their own way of policing stuff like these hacks. It just needs to be, they just need to let it play out, in my opinion. I agree. In fact, if you go back to my earlier and ugly videos, I talked about this with self-regulatory organizations, an SRO. And I'm firmly in support of this. I think that the cryptocurrency community needs to self-regulate. It matters who steps up to take that position. And so far, I haven't been very, very happy with those who have stepped up to do it, because I do not want it to be Coinbase. Let's see here. So this comment, Bitcoin has an executed inflation bug back in 2010. Yeah, 10 years ago. And one discovered a year ago by a BCH developer. And has it been so I'm not gonna die on the hill of whether that's true or not. I'm going to die on the hill of so what, right? Show me a cryptocurrency out there that is perfect code. You can't. I'm sure there are problems in Bitcoin. I know there are problems in Ethereum. I know there are problems in just about every cryptocurrency out there. There are exploits that are found all the time because there's no such thing as perfect security, right? Hackers are extremely intelligent. Malicious attackers are extremely intelligent, as well as security designers, right? So you have this constant back and forth fight between security and vulnerability. And as long as a project is supported, it can be patched and it can be upgraded. And attackers will continue to attack and find new attack vectors. It's the dichotomy is not oh, this code is better. No, the dichotomy is, kind of what is the framework of this code? What does it allow one to do by default? What is the network effect? What is the network like? How is the health of the network? Is it actively being developed? And is there a significant amount of money that all of the actors in the space, i.e. developers, miners, and users, have a nice trifecta balance of control? And I would say that certainly we do. A Wanda ain't got a motor in the back of her rod. Oh, I can't do this. I can't do this. The fact that Bitcoin has never been audited, it's been open source code for 10 years. This is ridiculous. All right, so thank you guys for the random hex showing toward the end of the event. Thank you guys so much for joining me for another episode of Breaking Bitcoin. Hopefully you guys enjoyed the show and you found the information useful. Please leave a comment down below with any thoughts, opinions, sarcastic remarks, and/or death threats. I'll be glad to respond to them, as well as what you guys would like to see in tomorrow's episode. Other than that, make sure to check out everything that we do as a company at premium.crackingcryptocurrency.com. Links will be in the description or in a comment posted down below very shortly. And make sure to catch us in the Discord. That's the best way to stay up to date and grow as a trader. Discord.crackingcryptocurrency.com. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin. And for the entire CC team, I'm Justin Wise signing off. Be good, guys. Trade safely. And remember, we're all in this together, guys. Cheers.